Welcome back to Making Money Matter, ladies and gentlemen. Or today we're going to make royalties matter for you because I have asked Alexandra Woodyer Sherron. She is the president and co-founder, or I should say CEO in Australia and co-founder of Empress Royalties. Now, a lot of you on this channel will have heard me speak to mining companies. You'll have heard me speak to people like Rick Rule, big macro looks at things. You'll have heard me speak to lots of different ways of not only investing in this in the stock market, but all sorts of ways. We've rarely talked about royalties. So this is going to be a deep dive not only into the royalty sector and why I think it's time for you guys to sit up, get educated about it, but also specifically I wanted Alex to come on and talk about her journey with Empress Royalties. So Alex, great to see you. Welcome to Making Money Matter. First time. Yay.
It is. Thank you, Carrie, so much for having me. I'm so excited to be here and chat with you and your audience today.
Well, one of the busiest ladies that I know in this sector. So let's get started because you and I had a really good chat at the Rick Rule conference in Boca Raton. That was fabulous. And one of the things I learned about you, but I want you to share it, is you got started in this business well earlier than most people. So give us a little bit of
Yes.
your background.
So I started out when I was 14 years old as a receptionist, and they sort of titled it, was it head of research, which meant I went through the yellow pages and literally called up every mining company and asked them to send their annual report. And as they would arrive months later, filing the old magazine racks in the wall. So, very early on was exposed to as a kid, the mining industry.
And so that was your early foray into
Yeah.
it. So again, tell us what happened from there. I mean, you weren't always calling up mining companies and asking them
No,
to send you a
still are
report.
today. No, no, I'm just joking. So no, I went on to my business degree in entrepreneurial management, and then I joined a commerce degree there, and then I joined PricewaterhouseCoopers as an analyst. Sorry, as an associate at PricewaterhouseCoopers. I was there for a couple of years, and then I joined a group called Endeavor Financial, which is a leading investment banking firm specializing in mining finance. And I joined as an analyst, originally working with a fund. And then I moved to London, opened up the London office there, moved my way up through the ranks, and became director of structured finance. Over a period of time, I was in London for about 10 years. I was involved in $1.5 billion worth of structured finance deals relating to mining. So we were doing the first project financing to Russia. I was involved with project financing to Africa, into South America. So, mining has been part of my background, and especially in the mining finance side.
Okay, so then how the heck do you go from I'm in structured finance and I'm doing all this analysis and working out the two starting up, and I think it was just 5 years ago, I think that Empress Royalty
Yeah.
came into fruition. So talk to us about that move. What the hell possessed you to start up your own company and get going?
Yeah, so David Rhodes, who's the managing director, and Endeavor was seeing that the streaming company finance solution, and we can talk a bit about that later on, but the streaming finance solution for mining companies, the streamers were doing bigger and bigger investment sizes, so $100 million plus. And at the time, no one was providing the streaming finance solution to the junior side of the market, to the smaller producers.
Oh.
And so we set up, no one was doing it. So that's why we set up Empress, was to provide that finance solution, sub 25 million, helping mines get in production or expand upon production.
When you say no one else was doing it, weren't the big boy, were they only looking at large mines and getting the streaming royalty for those guys? There was no one else doing this? And that was
So the
only 5 years
major
ago.
It was about 5 years ago. I mean, obviously, since there's been a few companies come out, more private funds doing it, but there really wasn't that sub $25 million group providing the financing. Everyone was doing bigger ticket sizes, and they were doing, even bigger ones a week. I mean, it's the same amount of work whether you're doing a $500 million deal, a $50 million deal, or a $5 million deal. But we knew we could get great returns on the smaller side of the market, and that again was leveraging off our experience operating in different jurisdictions and knowing how to do the structured finance side and applying it to the streaming side.
Okay, I'm going to get into, here's what I want to do. I'm going to do this in two parts, if that's okay with you, Alex. I want to start with
Okay.
educating people about why royalties, because a lot of people will understand I'm going to hold precious metals in its physical form, or I'm going to buy equities, or I'm going to buy an ETF, or I'll buy pool allocate, whatever it is. I don't think a lot of people understand the streaming model. So let's do a deep dive, if you like, a one-on-one on what is
Yeah.
what is streaming and why it's potentially something that people should be looking at.
Yeah, I think you can even take a step further back and look at what is a royalty. I mean, royalties have been around for centuries. Originally, it was sort of the kings owning the land, and someone would mine the land would have to make a royal payment to the king or queen for
Oh,
using their
wow.
land and extracting the gold or silver. So, it's got a huge history in the medieval days. That really was where it got developed further, and that was a connection between the landowner and the mineral rights and how people could take value for, not being miners themselves. So that business model evolved, especially during colonialism, and became more mainstream, and a way of people who owned the land to get compensated in a percentage of their revenue that was produced. They would receive a percentage of that revenue. And that's what a royalty is. It's like a record deal where someone makes music and they receive a percentage of revenue every time the record's played or the
Okay.
music's played, nowadays streamed.
Yeah.
And then the streaming model sort of came out, that was in the early 2000s, and that was through Wheaton, the time called Wheaton's Silver Wheaton, now called Wheaton Precious Metals. And that was taking the idea that you could take a byproduct from a mine, and at the time it was a gold mine, and they weren't getting any credits for the silver. So therefore they spun out this sort of way of doing it. And essentially what that is someone is pre-buying gold or silver at a discounted price. So
Okay.
you're paying 20% of spot or you're buying 80%. So the company that's mining is able to receive that capital. And in return, the person providing that capital, we're able to receive gold or silver at a deeply discounted price. A royalty agreement is a pretty simple agreement typically. A streaming agreement has a lot more bells and whistles that can go into it. So it's more of a structured finance kind of product. But to break it down, a royalty is more of a passive investment. A stream is more of a assertive investment, an active investment. When you're doing a royalty, you're getting a percentage of revenue, so that's dollar value. Where a stream, you're getting gold or silver or whatever metal it is, credits coming in. So it's a metal exchange that happens there.
And does Empress do both?
We do both. We mostly do streams. Occasionally we have done a royalty, but we're much more interested in taking that direct gold and silver. So we get paid in gold and silver. We get to pre-buy gold and silver and get paid in gold and silver.
Well, that gold lady actually turns around and says, that's the smart way to go. Because for me, I turn around and say, there's no, you know, there's a lot of credit out there. The currencies are under pressure, in my opinion. So if you're taking it in gold and silver, that's really smart. So was that a conscious decision at the start to go down more of the streaming? And did that come because of your structured finance background and understand? Because as you said, it's more complicated.
Yeah, it's definitely more complicated. It's sort of like a 30-page agreement. Again, I'm just simplifying this just to sort of explain the points here. But a royalty agreement's about 30 pages. It's you produce product. If you're producing, I get 1% of all your production, net smelter return. Where a streaming agreement will be, we'll get X amount of gold or silver to a certain point. There'll be different. We take security over the assets, typically first ranking security over the assets. So if things go wrong, we have the security over the assets, like a lien. So there's many more things that we can fine tune. If we know the company wants to ramp up and grow, we can structure according to that. So it's much more structured finance, but it's not as onerous as banks. So for groups looking to expand their production or get into production, they can raise equity, they can get some debt, they can get a stream now, and it can be a combination of all three. It can just be one or the other, but we're not as dilutive as equity and we're not as restrictive as debt. So that creates a lot more flexibility for the company that takes on a stream.
And so, is it hard to find them out there? Like, if, for example, you said right at the start that Empress made a direct focus to go on the smaller end of the market. Now, the
Yeah.
smaller end of the market is a lot more volatile, and sometimes they have challenges along the way. How do you how do you ascertain the risk in that junior market?
So yeah, definitely the junior side of the market has more risk than is junior mining. And geographically, and we can talk about more too, we're pretty open. We're in Peru, Mexico, Mozambique, South Africa. So we are going into more uh, exotic jurisdictions per se, but that's where we're able to get good returns and structure in those environments.
Okay.
So there's always that risk profile we look at. When we started the company, it was just a concept. We've now layered in four revenue producing assets. I'm looking to expand that portfolio aggressively right now, and bring them in. We've only been in now a few competitive bid processes. Most of the origination of these deals is coming through our own network, and that's through Endeavor Financial, who we have the partnership with, who's also a large shareholder in Empress, and also through our groups. I've just expanded the team as well, bringing some new BD advisors, someone who's based in Johannesburg. He's got extensive experience in mining as well as banking in South Africa. We've brought on someone recently for North America who also has similar experience, extensive experience in network. And we've known both of these individuals for about 30 years, 25, 30 years. So there's that network, and we're just expanding it and increasing it. But it really is through the people we know. It all comes down to the people.
You mentioned the jurisdictions that you're in. They are quite exotic. Peru, Mozambique, South Africa. What was the fourth one?
Mexico.
Mexico. Mexico, lots of silver in Mexico. Was there I guess, was there a focus not to go on North America or Australia like easy? Is it because the returns are better in these slightly trickier jurisdictions, can I say?
Yeah, so that's an excellent point. So there are a lot of other royalty companies and some of the streamers looking at doing investments into North America, Canada, the US,
Yeah.
Australia.
Yeah.
They really like royalties there. Royalties are very easy to attach to the land in those three different jurisdictions. But typically you're getting low returns. We have looked and we are looking at one right now in the US, and we have looked at one in Canada as well. But typically you'll see us going more into South America and Africa. And those are going into countries we've been before. We know how to operate. We know how to get the money into the country. We know how to get the gold out of the country. We know how to structure the right framework, the legal framework, how it works. We understand how to take security in those jurisdictions. And that's really leveraging off our experience. So, it isn't definitely taking a little bit more risk in the country profile, but the idea is to have a diversified portfolio. Portfolio IRR is about 30%. So we're getting great returns for going to those countries.
What are some of the red flags that where you just turn around and you've done the deep dive, you're ready to go, and then suddenly, like your jacket, there's a red flag.
Yes, we see a lot of kind of explaining our process. We find an option or an alternative, sorry, an investment opportunity, and first is who's the management team? Do we know them? Do we have multiple touch points with them? What are their backgrounds? We obviously have a connection with them in some way. And then, looking obviously at the country would have to make sense before we'd even go further. And then we start looking at the project and what their plans are, and do they make sense? What have they done to date? What's the management team capable of? We go through a desktop review. And our technical advisor, David Lang, has been in the business for about 40 years, incredible experience as an operator as well as a banker. We do the initial desktop review with help from Endeavor on that. And then if that makes sense, we'll then looking at seeing what economic terms we can offer and what the big picture of the company is. What are their growth plans? We want to make sure the stream is not too restrictive on them, that we can offer the terms that will help them get to where they want to, but they have enough healthiness in the economics for them to be able to deliver and deal with the issues that can come with junior mining. If that all makes sense, we then sign a term sheet. Then we start the deep dive due diligence. We hire third-party engineers to go to site that are specific to that deposit, that type of process, and see if it makes sense. I would say that, for the ones we've looked at, we've rejected now over 10 for technical DD that didn't stack up.
Okay, so
One for
sorry
EM.
to interrupt you, Alex. So you actually
Yeah,
send in your own team to do your
yeah,
due diligence on a project,
that's right.
and if they come back and go, the numbers are not, they're not there, that's like, all right, we're done.
Yeah, absolutely. We did have one where we sent out a team. We did a deep dive. We actually ran the documentation and and legal due diligence in parallel. And when we came through, the technical review and from the experts and from our advisors was, this is a great mine, but there's some aspects that you're putting in here that we don't agree with, and you need to do more work in these areas. And the company actually went away and did more work in those areas. and came back with a new mine plan with new economics. And for us to do the size of stream we were going to do before would have been way too onerous in the company with where the production profile changed to. But we've been still having ongoing discussions with them whether they can raise enough equity and if they're going to rejig things. So we do give that kind of level of advice of what it is, and they can take it or leave it. But we come pretty clear of where we want to invest and what requirements are for us.
Why would they go to you? I just wonder what's the benefit of a company going and using you to help finance versus bank finance or equity, whatever other options available to them?
Yeah. Sometimes it's a combination, and sometimes again it's just solo. I can give you an example of Peru and our fantastic partners there, Sarah's son. It's a private group owned by two individuals. They have the Serra Antipite mine. They didn't want to take on debt. They have another mine and some other operations, an engineering firm. They didn't want to take on debt, but they wanted to take advantage of where the gold price was going, and they wanted to expand their production. So they wanted to take their operations from 750 tons per day to 1,000 tons per day. And they needed about $10,000 for some new equipment, a bit of a plant expansion, and to get into a new part of the ore body. So, they didn't want to take on debt. They were private. Equity wasn't an option to them. So a stream provided the perfect financing solution for them. And we invested in them about 3 years ago. And we're getting close to getting almost all the money back from that investment. And they've finished off that expansion now. So that's been a great investment for us. Similar to one we did in Mozambique. That was a private group that we've known for a long time. They took over a plant. They needed to finish or half-built plant. They needed to finish it off and customize it for the type of to be able to process the oxides that were nearby. They put $13 million in. We put $3 million in, initially one, and then we increased our investment to $3 million. That was a development project that's now been in production for 2.5 years. We've received over $6 million US from that investment.
I'm going to do a deep dive into some of these specific investments that you've made in the second half of this
Okay,
conversation.
perfect.
That's okay, because
Yeah, yeah, that's great.
I do want to understand that, and I do want to understand the investment thesis. But for this first half, I just want people to understand why this is potentially something that they should look at from an investment point of view, if that's okay. What I want to understand, because a lot of people understand equities or they understand buying physical gold and silver. What's the upside for them looking at somebody like, well, it could be Empress, it could be Franco-Nevada, like there are others out there. So I just want to understand
Absolutely.
what's the investment thesis in your opinion. Now, clearly, ladies and gentlemen, she's the co-founder and the CEO, so she's going to go, let's go and invest in Empress. There's no one else out there, is there, Alex? No, nobody.
There's different types, as I always say. There's different types. So, from a super high level, royalty and streaming companies, you're able to get exposure to gold and silver. You're able to diversify your portfolio. Sorry, they created royalty and streaming companies have a diversified portfolio typically. So you're getting diversification by investing in them. But you don't have the typical costs like a mining company. You don't have the upfront capital costs. You don't have the high operating costs. We're able to operate really lean teams and keeping our G&A low. So it's a lot of cash flow that comes out of these companies. And it's consistent cash flow because we don't have all those other costs that are built into it. So it's a way of getting exposure without having to buy into a mining or development stage company. And then if you break it down even further, there's different types of royalty and streaming companies. You've got and you could look at that from different ways. There's sort of the big boys at the top, very stable, what you're getting, which I think is a great place for someone first time entering into the space, into the mining sector to get something very stable in the portfolio.
Yeah, and that's what I want to understand, Alex. So for people, I've got an audience that some of them are new. And so for them, it's something like a Franco-Nevada, stable, going into big companies. Is that what you're saying?
Yeah, Franco-Nevada, Wheaton, Royal, those are the big boys at the top. And they're very, pretty much very stable companies to invest in. That gives you exposure to gold and silver and other commodities, depending which one you like the best. Slightly different business plans, but very similar in the sense of that stability and those billion-dollar market cap companies that give you that great exposure to the sector. And I think that's probably a great first entry point for most people. Again, not an investment advisor, but that's kind of,
Yeah.
I think,
Yeah.
a place
We
for
always
a
say
lot
this,
of
Alex.
investors.
We always
Yeah.
say, hey guys, not financial advice. We don't know who you are. This is Alex and I having a conversation about all that's happening in this area. So go talk to someone, but just have a listen and get yourself educated. But so
Yeah, absolutely.
that top end, the big
Yeah.
boys.
Yeah, and then there's sort of the intermediary middle-sized guys. There's
Yep,
been a lot of consolidation in that space recently. And then there's a whole bunch of sort of juniors and then micro cap. So depending, stability down to more speculative, I think you can
yep,
kind of view it that way. And then and that's just purely based upon market cap size. And the volatility that can happen with junior companies and not as liquid and the ups and downs that the smaller companies can face. But then you have different investment theses. So you've got ones who are prospect generators. So I
okay,
think this is a pretty good way to get exposure to exploration because they've got a portfolio of exploration assets. So that allows you to get the diversification that way. And typically they're economic geologists who are running these companies who really understand the geology and different regions, able to build teams around that. So I think that's a good way to get if you want exposure to exploration. Then there's a bunch of companies out there that are buying existing royalties. So the royalties already exist, not quite from the
ah,
royals as we talked about earlier, but
yep.
they're acquiring portfolios of assets or they're finding individuals who want to sell their royalty because they were the original geologist on it. And they're building up this lovely collection of royalties. Those are typically going a premium. They're part of a competing bid process, historically getting lower returns, and there's no direct relationship with the company. So for us, we're on what I call the third pillar, being the creation side. So
Okay,
typically we're not buying them, and typically we're not looking at exploration. We are looking to directly invest our capital into mining companies. And we're able to really target our investment dollars in getting mines into production or expanding production using that finance solution for them. So we're not paying somebody else money to take a royalty on another mine. We're directly investing into the mine. So we have that direct relationship. So I'm not waiting for quarterly financials to come out to figure out what might or might not be happening with my royalty. I've got monthly reporting. We're very involved with the companies. We can go to site. If something's not going aligned, we can work with them to make it work. And we've done that in the past. If things aren't perfectly aligning up and it's junior mining, things never, it is junior mining, so things don't necessarily go according to plan, but that flexibility is in there. And for me, having that direct relationship really mitigates the risk and really allows us to understand our investments and continue to understand our investments.
all right. But before we do the deep dive into Empress royalty, give us 3 reasons that you think that people should be sitting up and really having a look at this sort of royalty streaming business at the moment.
I think getting exposure to gold and silver, obviously physical is fantastic, and I think I should have that in their portfolio, but getting exposure to a diversified investment company, essentially, I think really gives you a lift. So that is that diversification as an investment company in the royalty and streaming space. I think now with gold and silver hot as can be and where it potentially can go and some of the forecasts we're seeing coming through and where the world stands, I think you and I are very aligned on what we think the potential is there.
Very
It's a
much
great
so.
way to get exposure to gold and silver. And you're not locked in with the capital costs and the operating costs of typical mining companies.
Well, that's been a really so, guys. This is what I want you to understand. It's something that it's another way to get exposure to precious metals and also mining because it's not necessarily just gold and silver, is it?
No, it's not. And I think we're one of the few that are actually pure gold and silver, so I should clarify that. Other ones have a mixed commodity base, and there are other ones that are just purely critical metals or base metals. So again, you can kind of look at the different types of royalty companies of what metals excite you, whether you want full diversification or specific metals that you want exposure to.
Alex, it's been absolutely fantastic to chat with you today. And we'll be back shortly with, I want to do a deep dive next time into who are Empress royalties and why people should sit up and take notice. But for now, thanks so much for joining me on Making Money Matter.
Thank you so much. Absolute pleasure.